The rule proposed today deals with volume-based discounts that exchanges offer to broker-dealers. You say this rule would help enable more competition in this market. But something that was raised at this open meeting was the idea of the timeline and sequencing with the other equity market structure proposals that the SEC has already made. How do you see the timing working out with all these different rules here?
The recent SEC proposal is all about volume-based discounts offered by stock exchanges to broker-dealers. The idea behind this rule is to promote more competition in the market. However, there are concerns about timing and sequencing, especially in conjunction with the other equity market structure proposals that the SEC has already introduced. How do these rules fit together? Let's hear from the SEC Chairman, Gary Gensler.
In terms of this proposal today, this is trying to level some of the playing field between and amongst brokers, because stock exchanges today are offering different fee packages through these rebates so that the mid-sized brokers and the smaller brokers in essence pay higher net fees. But again, it's not against the clock. It's really getting all the feedback, thinking through the economics, thinking through the legal authorities, and most importantly, what goal are we seeking? So in the equity markets, we were trying to help promote competition and efficiency, basically for those individual investors in the market, getting a better pricing in the market, and of course helping issuers that are issuing the public companies.
Another significant proposal on the table relates to climate disclosures, specifically Scope 1, 2, and 3 emissions. The state of California recently passed legislation requiring companies with over $1 billion in revenue to disclose these emissions. How does this align with SEC's role, and is it setting a precedent?
We have a different role than the legislators in California. Our role, we're not a climate regulator, we're not a climate agency. In essence, we're an agency that's climate risk neutral. It's about disclosure to the public investors. So you're an investor, and do you find this climate risk information relevant to your investment decisions? And what we know is, just looking back to 2021, 2 years ago, over half of the largest companies, over half of the Russell 1000 are already making disclosures around their greenhouse gas emissions. To use the terms you use, Scope 1 and Scope 2, far fewer are making disclosures around so-called Scope 3. If the California law, what's now been signed, so that changes some of the economics. It means more companies will be making these disclosures in a few years, and so that does affect when we think through the economics of anything we're doing.
The Grayscale case and its potential impact on Bitcoin-related products have been widely discussed. Given that the SEC didn't appeal a recent court ruling, what should we expect in the future regarding these products?
In addition to receiving that letter last week, something else that happened last week, or rather didn't happen, was the SEC acting to appeal a court ruling from August in the Grayscale case. Grayscale, of course, trying to convert GBTC into a spot ETF. I know you can't comment on ongoing litigation, but should we still be considering that ongoing litigation given that lack of appeal at this point? And if not, what happens next?
Wait, didn't you just say that you knew I wasn't going to comment on the litigation? But let me just say...
But is it still ongoing since you didn't appeal?
We didn't appeal last Friday. I think that's accurate.
So you could still in the future in another form.
But what we have in front of us, just so that the viewing public understands, we have not one, but multiple, I think it's 8 or 10 filings that the staff and ultimately the commission is considering for what's called exchange-traded products, for Bitcoin to be in a security. So the Bitcoin would be held and then there'd be something called an exchange-traded product, and that would trade on various stock exchanges. And those filings are in front of us. I can't prejudge any one of them, but there's 8 or 10 that we're looking at.
Well, there is a large number, and there is kind of a narrative in this market, and I wonder if you could put it to rest, that someone's going to get to go first. Is that likely to happen, or is it likely to be a group approval? If you're going to have one, a bunch of products could be approved at the same time.
Again, I'm not going to prejudge. The staff's doing work on those multiple filings, but it's also about those companies are issuers. See, when a company is actually, or an asset manager is seeking to take something public, these exchange-traded products need to register with the SEC, and they go through a filing somewhat similar to going public, like an IPO. And so it's really the work of our Division of Corporation Finance that gives feedback. Our Division of Trading and Markets, of course, looks at the filings of the exchanges.
In terms of these Bitcoin-related product filings, we need some insight into how the interaction between issuers and the SEC has been progressing. Let's take a listen to Gensler to get more details on these discussions.
Well, there is a large number, and there is kind of a narrative in this market, and I wonder if you could put it to rest, that someone's going to get to go first. Is that likely to happen, or is it likely to be a group approval? If you're going to have one, a bunch of products could be approved at the same time.
Again, I'm not going to prejudge. The staff's doing work on those multiple filings, but it's also about those companies are issuers. See, when a company is actually, or an asset manager is seeking to take something public, these exchange-traded products need to register with the SEC, and they go through a filing somewhat similar to going public, like an IPO. And so it's really the work of our Division of Corporation Finance that gives feedback. Our Division of Trading and Markets, of course, looks at the filings of the exchanges.
Well, and we know the issuers have had interaction with the staff, questions the staff has asked that issuers have tried to address. Do you have a sense at all of whether or not the attempts to address those questions and issues have been productive, fruitful, changed anything?
Again, this is a time-tested process that goes back decades. It's like the staff of the SEC, it's called the Disclosure Review Team. Mm-hmm. But in that group, they respond and give feedback to potential issuers. But I don't have any details on those individual conversations.
Thank you for joining us today as we provide insights into the recent SEC proposals and ongoing litigation. Don't forget to like and subscribe to Digicoin Daily for more financial updates. Stay safe and stay tuned for our next episode.